Hi guys, good morning and welcome back. Today we will try to understand some of the qualities as an investor we should incultivate in ourselves to in order to be a successful investor for a long term. Okay, so basically today is the market holiday as 17 July 2024 Wednesday is a Muharram holiday. So we don't have any stocks for radar and all as we have in a daily routine. So we don't have all those such things today. Okay, so we will try to understand few of the other things apart from the market hours and market stocks related and specific things about we will daily we will be talking about all those things on a regular basis. So every day we will be keep on talking about this, but let us shift the gear towards the psychology required for the market. Okay, so actually market required few other things, few other qualities that we have to incultivate in ourselves in order to be a successful investor and in order to stay invested for longer period of time in the market. So these are the important qualities that are required in order to stay in the market. So these are very important secret, guys. So one is the research and analysis. So it is basically stock market is always versatile in nature and dynamic in nature. The everyday trend will be keep on changing, so that every day and every trends, every sectors. So there will be sometimes sectors also will keep on changing. So there will be this kind of if you look at in pandemic, IT sectors were in boom, but now those are undervalued, those are underperforming sectors. So now the art sectors will be defense PSUs like that. So if you in order to be updated with the market, you have to keep on researching about the market and keep on doing the analysis, whether it may be fundamental analysis, whether it may be chart analysis, whether it may be knowing the where and all the business is getting into, where and all the management is trying to focus, where and all the management vision, what are the management visions and missions. Basically it's all about researching and analyzing the overall stock market. So then comes patience, guys. So this is the key. Okay, say for example, if you have invested some amount, some xyz amount in the market, if you do not have the patience to hold that investment to the longer period of time, then there will be major losses can happen, because nobody can predict when the rally can come in the market, when the when the stocks may underperform, when the stocks may outperform. So that we nobody can tell, nobody can even predict that. So nobody is get that pulse where how the market is going to behave, because market is reacting to so many things. So we'll not get to know. So the patience is the key. Sometimes short term falls may happen, sometimes short term outperform can happen. So stocks may go up, stocks may go down, but be patient over a period of time. Power of compounding, in order to get the benefits of power of compounding, patience is the key. Please keep an keep this quality cultivating in our day-to-day basis, because in the stock market, whenever charts started going up or whenever charts started going down, we will lose the patience. Okay, so don't lose the patience. Keep this patience as the major key or a crucial quality of an investor. So then comes risk management. So this is setting up the clear goal and diversifying the portfolio and manage our risk to minimize losses. So basically it is we are putting our capital into the stock market, we have to manage our risk, right? So in order to well manage our risk, so we have to set our clear goals for long term and diversify our portfolio into different sectors, so in order to minimize the risk. Okay, so risk management is also one of what do we call, there is something a trick. Sometimes some of the sectors might perform well if you are confident enough. I think at that particular point of time, taking the risk is a good thing. But sometimes we will be knowing that this sector will not perform well, and we will not be having the confidence. But still, if we are investing, so that is there is a trick. So there, so in such scenarios also, if we are investing, I think we don't know, like sometimes that risk management will also be sometimes complicated, but keep these things very well managed. Okay, risk management is very very important thing. So then comes the discipline. So the investment is should be disciplined investment, guys. Say for example, I invested today, I forgot, and then after few years I'm coming back and I'm in indisciplined way of investment is not a recommendable, or it's not suggested, or it's not recommended for the market. Because so we don't know what the market trends will be if you are not updated with the markets, and if your goals are not clear, then there will be a kind of confusions may happen. Um, so that is one thing. And one more important thing is, guys, be realistic in the market. Realistic expectation. Say for example, one stock has given multi-bagger returns this year, it does not mean that the same stock is going to give multi-bagger returns in the next year. So be realistic. On an average, you see the performance of the stocks, and how on an average basis how it is going to perform. Don't keep unrealistic expectations. Okay, I have seen many people are coming and joining into the stock market because of some unrealistic expectations, because of some of the ads and some of the advertisement that they are seeing. This stock has given that much returns, this stock has given this much returns, like that. So it is not like that. So you have to see the other part of the coin as well, other side of the coin as well, right? So that is one side of the coin. Other side of the coin is there are many stocks has fall down like anything. It has fell down very drastically. Okay, so that is one more important thing. We have to be very careful about it. So then comes diversification. Okay, so diversification is also one of the very important quality of an investor, that we have to uh, what do we call, spread our investment across different sectors and different asset classes, so that our risk will be very less. So we can minimize our risk by diversifying our portfolio into different sectors and different uh, asset classes. Basically, uh, if you invest in different sector, what happens is, like say for example, one of the sector is underperforming, so some of the sectors is performing well. So but still your portfolio will be performing well. So then comes the long term perspective. This is one of the important quality, I would say. Because people will be getting into the stock market for short term, to make the bucks in very short term. So that is not possible, guys. So there is no perfect book for the stock market that this is going to happen, that is, then there is nothing like that. So you uh, stay invested in the market for longer time, and the market will reward you with returns like anything. Market will reward you with a good returns, or market will reward you with a decent returns. So long term is the key. Long term and patience, whatever we discussed now till now, those are all the keys. And continuous learning. So this is also one of the market strategy, that if you keep updating yourself, and if you stay updated, and if you stay relevant to the market, so then you can make your good decisions, basically. So if you are having a knowledge on economy, if you have the knowledge on the business, if you have the knowledge on the geopolitical things that are happening, uh, basically it's not only about the market, it is all about the market related stuff. Okay, so if you are stay updated, I think that is the one of the best thing that you can do in the market. So then comes diversified portfolio. This is we have already talked about investment in different sectors, and different large caps, small caps, and mid caps, like that. So the combination and the formula, there is no formula also. There might be some formula, standardized formula, but that is not tailored for your life. Because my life requirements are different, and others person life style is different, and what my expectation is different, what others expectation is different. So it is like, there is no tailored formula for this, but we have to make one formula according to our requirements. So that is what it means. And one more important thing is tax awareness. Tax awareness is also one of the beautiful thing as per our market and our Indian governments. So tax awareness is also very much important, guys. So then regular portfolio rebalancing. So this is one of the important things that I must talk about. Because portfolio rebalance. Say for example, whenever we talked about stock market, right? So we will always be telling like, we keep stay invested for longer time, stay invested longer term, like that we will be telling. Even though if stock falling, you keep invested, like that only, the things are going on. But the thing is, what happens is like, yeah, if the stock is underperforming because of the market condition, I accept it, stay invested. If the stock is underperforming because of its quarterly results, or because of its management issues, it's because of some of the compliances issues, because of some other issues, so then we have to be very careful. Then and there is itself we have to take the right decision. Then we have to rebalance our portfolio. So then comes avoid emotional decisions, guys. Most of the times, uh, we will be very emotional and we will be taking the decisions based on the emotions. Okay, avoid emotions when we are taking the decisions in the stock market, and make the decisions based on the data driven decisions, okay, rather than the emotions. So it should be data based decisions. It should be data analysis. Our analysis should be based on the data, and the decision also should be I mean based on the data. So it should be data driven analysis. So that's all, guys. That's all from my side. Thank you so very much. If you like my content, please hit the like button and share and subscribe and comment, guys. Thank you so very much.